we're a net lease REIT. We focus on shorter term net lease properties, primarily occupied by investment grade credit tenants. The vast majority of our portfolio is that IG credit. We like the shorter term leases because our cap rates are higher, and also it gives us an opportunity to manage the assets during our ownership, so we can extend the leases because of our hands-on asset management philosophy, and we have just a higher overall going in cap rate, which typically yields higher returns for shareholders. So I've been in this industry for 20 years, and I have played multiple roles within this industry. I started as an analyst, so the stereotypical sitting in a cube and no one talks to you job. And then I became a real estate broker, which was a very good insight into how the deals are structured, and also the different investment philosophies that go into net lease investing. And what resonated the most with me and why I started this company is I saw that no one was focusing on the shorter term net lease properties. And so I felt like I could take that higher cap rate, higher yield, hands-on asset management approach and put it into an institutional platform. Fundamental trends are cost of capital. Where is debt and equity, and how much do those cost our company? We don't really focus or worry about high interest rates, because what that typically translates to is higher cap rates for us, especially since we have shorter term net lease properties. We have a very long-term outlook, hence our name, generational income properties. So we are not really focused on short-term periods of time. We have a very long-term outlook. The risks that we constantly look at, we underwrite from the beginning, and that's tenant vacancy. So that's why we're such hands-on managers. We want to make sure from before we own a property that we're very well aware of what the probability of a default is in our tenancy, as well as a potential vacancy in that property, and we underwrite those from the beginning. So we want to make sure that if there is even a low probability of a vacancy, that we know how much that will cost us from the beginning before our purchase. Doesn't really keep me up at night because we do a lot of homework on it, but it is one of the major risks. That's an easy one. There's no one in our space who's focusing on the short-term net lease properties. That's both from the institutional perspective, meaning the other REITs or big funds, and the private investors. So there are very few people or institutions who focus on shorter term net lease properties. We really like that because it's a supply and demand curve. When there's more supply, of which there are in net lease investments of shorter net lease terms, that means that the demand is lower, and our prices are better. Cap rates are higher because of that. So that really sets us apart from everyone else.